For more than a century, oil production has been on a relentless climb. Since the late 19th century, when the first commercial wells in Texas, Pennsylvania and the Caspian region began pumping black gold, global output has skyrocketed from few thousand barrels a day to nearly 100 million barrels daily today. Oil became the backbone of modern civilization, powering cars, fueling industries and even shaping geopolitics. Every economic boom of the 20th century has had oil flowing at its heart, but what if I told you this might be the last great oil boom in human history? The signs are flashing everywhere. China, once the engine of oil demand, has hit a consumption plateau for the first time in decades. In the United States and the European Union, demand is steadily shrinking as electric vehicles capture record market share and efficiency standards cut fuel use. Even shale oil fields, once hailed as limitless, are showing signs of decline. At sliding oil prices, an radical question emerges. Is the age of oil finally peaking? Or is it just another false alarm in the long turbulent story of energy? Share your thoughts in the comments below. And before we continue, don't forget to hit like, subscribe and share this video, so you don't miss what's coming next. Oil didn't just fuel engines, it rewrote history. By 1950, global production has surged past 10 million barrels per day, and by 1970s, it topped 50 million, powering the golden age of mass car ownership, aviation, and even sprawling megacities.
Oil wealth built modern economies from Saudi Arabia to the UAE, and gave rise to petrodollar power that still shapes global finance. Its role in war was equally decisive. Allied tanks and bombers ran on oil, and entire campaigns in World War II were fought over access to it. Whoever secured the flow of crude often secured victory. The most dramatic shift came with the U.S. shale boom. Between 2008 and 2019, American oil output nearly doubled from 5 million to over 12 million barrels per day, making the U.S. the world's top producer.
That single surge reshaped global energy markets overnight, but today, after this century of expansion, the once limitless boom is showing unmistakable cracks. For decades, oil demand seemed unstoppable, but the International Energy Agency now projects that global consumption will plateau before 2030, a turning point few imagined even a decade ago. The reason? Growth is slowing in China, while demand in the US and Europe has already begun to shrink as electric vehicles and renewables eat into oil's dominance.
Yet, on the supply side, producers are still pumping at full speed. New barrels are flooding in from the United States, Brazil, and Guyana, alongside steady output from OPEC+. The result? A looming oversupply that could drive prices down sharply. Some analysts warn that oil may dip below $60 per barrel in 2025, a far cry from the triple-digit surges of past booms. Even the mighty U.S. shale revolution is running out of breath. After doubling production between 2008 and 2019, shale output is now slowing. Experts predict it will peak around 2027 before entering a rapid decline, as the best drilling spots are exhausted and costs rise.
These shifts mark a dramatic contrast with oil's history of endless growth. Instead of another supercycle, the world may be staring at the first real ceiling on demand and a fragile future for the industries that powered the modern age. Every Tesla, BYD or Volkswagen rolling off the line is another nail in oil's coffin. Just 3 years ago, in 2021, there were about 20 million electric cars worldwide. By 2024, that number has nearly tripled to 58 million, and the curve is only getting steeper. What once looked like a niche market is now a mainstream force.
Nowhere is this clearer than in Norway. A staggering 90% of all new car sales are electric, and oil demand in the country has already fallen by double digits. What seemed impossible just a decade ago, entire nations cutting their gasoline use, is happening before our eyes. And this is only the beginning. By 2030, EVs are expected to displace nearly 5 million barrels of oil per day. That's about 5% of total global demand, wiped out in less than a decade. For an industry built on relentless growth, even small percentage drops hit like a shockwave.
The cars that just plugged in at your neighbor's driveway might seem ordinary, but multiplied millions of times, it signals a historic turning point. Oil's monopoly over transportation is slipping, and fast. OPEC, for one, predicts global oil demand will keep rising until at least 2045, reaching more than 110 million barrels per day, a record high. This argument is simple. While rich countries are shifting away, emerging giants are still climbing.
Take India. Its oil consumption grew by over 5% in 2023 alone, and with millions joining the middle class each year, car ownership and air travel are set to explode. The same is true across Southeast Asia, where economies are expanding faster than renewable infrastructure can keep up. And then there are the sectors that don't have easy substitutes. Petrochemicals, used to make plastics, fertilizers, and chemicals, are projected to drive over 40% of new oil demand growth through 2040. Aviation is another heavyweight. Global air travel is already above pre-pandemic levels, and jet fuel demand is surging. On top of that, geopolitics still makes oil unpredictable. A single conflict in the Middle East, a round of tariffs, or a shipping bottleneck can send prices soaring overnight. Just look at 2022 when oil spiked above 120 per barrel despite long-term forecasts of decline.
So maybe this isn't the death of oil at all, but maybe it's something else entirely, a slower, messier decline where oil habits clash with new realities and where every forecast could be overturned by the next global shock. The oil industry isn't blind to the storm clouds ahead. It's already pivoting. Instead of pouring billions into new drilling, giants like Exxon, BP, and Shell are directing record sums toward shareholders' dividends and stock buybacks.
In 2023 alone, the 5 biggest oil companies returned over $100 billion to investors, signaling that they see fewer growth opportunities underground. Part of the problem is geology. The U.S. shale boom was built on the rich Permian Basin, but experts warn that prime acreage could be exhausted within this decade. Wells are getting deeper, costlier, and less productive, making the old model of endless expansion harder to sustain. Meanwhile, governments face a different crisis: money. Fuel taxes, which make up nearly 40% of transport budgets in Europe, are shrinking as EV adoption accelerates. That lost revenue is forcing policymakers to rethink how they fund infrastructure, and in some cases, pushing them to speed up the energy transition.
The bigger picture is even starker. If US oil production peaks and fades, national security strategies may accelerate decarbonization, not just for climate, but to reduce reliance on unstable foreign suppliers. What emerges could be the blueprint for the next global energy order. For more than a century, oil has powered the world, from fueling industrial revolutions to shaping geopolitics. Production surged, economies boomed, and energy security dictated global power. But now the signals are undeniable. Global demand may plateau by 2030. EVs are slicing millions of barrels of daily consumption, and the US shale miracle is nearing its peak. Yet, it's not all doom and gloom. Emerging markets, petrochemicals, and aviation still keep oil in play, while geopolitical shocks can suddenly spike prices. So maybe we are not witnessing a sudden collapse, but one thing is clear: the era of endless booms is fading. The real question: if this truly is the last oil boom, will nations pivot smoothly, or will new energy powers emerge from the chaos? Think about it and share your thoughts in the comments below. Also hit like, subscribe, and share this video so you don't miss what's coming next. Next one's brewing. Stay ready.